Hi, welcome back to Engineering Economics course. In this lecture, we will learn cost estimation techniques. Engineering economy deals with future decisions or the decisions that we make now which has outcomes in the future. And when we talk about future, it's full of uncertainties. And we may not know some data or some information related to the future exactly. And how can we make a decision now without knowing its outcome in the future? So we may not know these exactly, the outcomes in the future exactly, but we may use some forecasts which we call estimates. And here in this chapter, we will learn cost estimation techniques. We will talk about the two important categories of cost estimation, which are called the top-down and bottom-up approach. We will learn an integrated approach for developing the net cash flow for a project alternatives, which will consist of some basic categories, three basic categories, namely the work breakdown structure, cost and revenue structure, and estimating techniques. In this lecture, we will learn these three basic categories of the integrated approach. So let's get started. The objective in this chapter is to provide present and an assortment of methods for estimating important factors in an engineering economics study. So we will be talking about future decisions. We will be, after this chapter, we will start learning about cash flows. And in order to develop these cash flows and do engineering economy studies, estimation is very important. And in this chapter, we will learn cost estimation methods. Remember the 7 steps of engineering economic analysis. So this chapter is related with the 3rd step of engineering economic analysis, which is the development of the net cash flows and other prospective outcomes for each alternative. So remember, in an engineering economic analysis, we will compare alternatives with each other, and each alternative will have their own outcomes. We make a decision today at this point, and as a result of this decision, there will be some financial outcomes. These will be either earning or losing or paying an amount at a certain period in the future. And all these decisions are in the future. And at the end of this chapter, we will have some methods in our hand to develop these alternative cash flows. Currently, maybe this term cash flow is not familiar with you, but we will start learning it in our next chapter. Simply, cash flow means as an outcome of your decision, how much you pay or how much you earn at each period into the future. Cash flow basically shows this payments and earnings with respect to the periods. So engineering economy deal with outcomes in the future that are in the future. So we are related with the future, but future is full of uncertainties, and you may not know what will happen exactly in the future. So how can you make a decision without knowing what will happen? The idea is, yes, we don't know what will happen exactly, but we may forecast, we may estimate what will happen. So for this reason, estimating the future cash flows for feasible alternatives is critical, is very critical. Okay, and basically this diagram over here is a cash flow. We will talk about it later on, and this diagram shows us how much you pay So the downward arrows shows you the payments, and upward arrows shows you the earnings, and the length of the arrows tells you the amount of payments or earnings. A larger arrow means a larger earning. And this line is the time axis. So 0 means it's the current time. 1 means, for example, after 1 year, after 2 years, after 3 years. So these represent the period of time, and the arrows downward and upward shows you the payments and earnings and their amounts. And the thing is, we are at this point at time 0, and we need to know what will happen 1 year after, 2 years after, 3 years later. We need to know these, but since they are into the future, we may not know them exactly, but in order to make a decision now, we need this data. And the idea is to estimate their values. And in this chapter, we will learn different methods on how to estimate these values. Then the question is, what is estimating? What's an estimation? Estimating, it's a forecast. It's the best guess in the future. It's a projection, okay? So you may not know exactly what will happen, but you may have some idea, you may have some indication about it. For example, what will be the cost of, let's say you are buying a car, and what will be the cost of a car, or maybe the price of the petroleum. Okay, so you need to make your budget analysis for the next 5 years, let's say, and the most important item in your budget is the cost of oil. And what will be the cost of petroleum next year, the following year? And you know, it fluctuates a lot. There is a lot of variation in the petroleum prices. And how can you know? How can you know it exactly? It's impossible. But the thing is, looking at the past prices, looking at the current conjecture in the world economics, and etc., you may have some indications, and using these, you estimate, you make a guess in the future. So this is estimating. And what is the purpose of estimating? You may use the results of estimation in different places. For example, for an item, in order to give a bid, or in order to evaluate a bid, you can use the results of estimation. In order to make profitability analysis, you may use estimating or estimation. In order to make decisions on make versus buy, okay, an equipment or a car, or in a manufacturing facility, if you are producing some item, a subcomponent, should you make it by yourself or buy it from a supplier? In order to make these decisions, you may use the outcomes of estimating methods. In order to justify the investments, you make an investment, either you buy a land or go into a business, and in order to justify the profitability of these investments, you can use estimating methods. It can be a basis for comparing manufacturing methods. There may be alternative manufacturing methods, and in order to compare them, you can use the outcomes of estimation as a basis. It can be a basis for cost reduction, and you can use it for planning new products and services. So these are some of the purposes of estimation. There are two fundamental approaches in cost estimating. The first one is the top-down approach, and the second one is the bottom-up approach. Okay, the names actually implies what these are. In the top-down approach, basically, this approach uses the historical data from similar engineering projects to estimate the costs or revenues or other related data. And these are estimated by modifying the data, or it's extrapolating the costs, revenues for the current project. The modification of this data, look, you have one project, and earlier you performed some similar projects to this one. Since they are similar, their costs, their revenues also have similarities. And using that past data, somehow we are going to estimate this new one, the current project. But the thing is, they are not identical. They are similar but not identical. Their activity levels can be different. Their energy consumption levels can be different. The weight can be different. There may be some change in the inflation and deflation of the economics, in the general economics, or there can be some other factors. The size of the item, for example, in a manufacturing project, you already produced one item. Now in the current project, you will produce same item, but in a different size. So using the data for the past project, we want to estimate the future one. So the size, how would the size affect the cost, the revenue, and etc. So how we do it? By extrapolating. And this approach is best used when these alternatives are still being developed and refined. It means that at the early stage of the project, using a top-down approach is the preferred alternative, or it's better to use this top-down approach at the early steps of the projects. The second approach is so-called the bottom-up approach. This is a more detailed method of cost estimating because it breaks down the project in small, manageable units and estimates the cost of these smaller, manageable units. And then these smaller units, the estimated costs of the smaller units, are added together with other types of costs to obtain the overall cost estimate. This approach usually works best when some detail concerning the desired output, or for example a product or a service, has been defined and clarified. It means that at the later stages of the project, this approach is more suitable. We said that the top-down approach, the previous approach, is usually more suitable at the early stages in the project, but this bottom-up approach is more suitable at the later stages of the project. An example will be helpful in understanding these top-down and bottom-up approach. Let's consider this example which is related with obtaining a Bachelor of Science (BS) degree from a university. Okay, so let's consider that we want to forecast the expenses of getting a BS degree from a university, from SQU, for example. Okay, now how can we estimate the cost of obtaining this BS? Think about this. And the idea or the method that you will use in your mind will be either one of these approaches. Okay, let's see how we can approach this problem. If we use a top-down approach, what we will do? We will either use the published cost of SQU, so you can go into the web page and have a look at the cost, the tuition cost of the university. But if it is not available for your own university, you can take another similar university, a university in the same region with the same qualifications and etc. Okay, and then when you obtain these, you cannot use it directly into the future. If it is for another university, for example, you have to adjust it for your own university. For example, if you are looking for the cost of SQU, but it is not available, then maybe you can take a university in the United Arab Emirates. But the level of cost, general economic index in the United Arab Emirates and Oman are different. So it means that you may need to adjust the cost that you obtain from that university in the UAE for Oman, okay? Or even if you get the cost for SQU in its website, you may need to adjust it for inflation. What's inflation? Inflation is the general price increase and level of price increase at each year, okay? With the level of inflation, or there may be some extraordinary items that as a student you might encounter. Okay, so let's see how we can do this. Assume the published cost of this university is $15,750 for the current year. If you start now, then you need to pay this amount. And you anticipate that this cost will increase at a rate of 6% per year. And it includes the tuition and the fees, university housing, and a weekly meal plan. Okay, so the cost $15,750 includes all these. But some costs are not included, which are the costs of the books, supplies, and all other personal expenses. These are not included in this cost. And you may think, okay, if I pay this amount for the tuition, for the housing, for the meal, then what will be the cost for me for all other expenses? And you can come up with saying that, okay, for these other expenses, the cost can be $6,000 per year. Okay. Now, we know all these numbers. We get all these numbers. This is an estimated value. It's our initial estimate for other expenses. This is the published cost, but this rate of increase is also an estimated value. And then how can we estimate the total cost for 4 years of study in the top-down approach? Simply, you can consider each year one at a time. Okay, so for year 1, the current cost was this, and for this year 1, it will increase at a rate of 6%. So it means that $15,750, okay, will be increased by 6%. And when we say it's increased by 6%, simply we are multiplying it by 0.06. And if you take into this parenthesis, it will be 1 plus 1.0.6. Okay, so this value over here, this multiplication, is a result of this. An increase of 6% means you take the 6% of the value and add it to the original value. So when we say a 6% increase, you don't need to do this calculation at each time. You will simply multiply it by 1.6. And if it is a 6-point decrease, again, you don't need to make this calculation. You just switch this plus to minus, and it will be 15,750 multiplied by 0.94. This is if it was a 6% decrease, it would be this one. Okay, this is just a remark. Okay, then what happens? The original cost increases to this one in year 1. And we have the estimated other costs, which is 6,000. It means that the cost of total expenses in year 1 is this much. And we assume that these other expenses will remain constant throughout the 4 years. Actually, this may not be realistic due to inflation. Maybe these costs will also increase. But in this example, we assume it to be constant to make it simpler. Similarly, for year 2, year 3, we do the same analysis. So now what happened? The cost was this much after 6% increase. And in the second year, this will be increased by 6%. And the new cost for second year will be this much. And then this cost will be increased by 6%, and the new cost will be this much. And this cost at the beginning of year 4 will be increased by 6%, and the cost in the fourth year will be this much. And if we add the other expenses at each period, we will obtain these total costs for each year. And then when we sum up them, the total cost of this BS degree for 4 years of study at the university is $97,000 approximately. Okay, so this is an estimated cost, and this is the top-down approach. Now let's see how we can use a bottom-up approach. In the bottom-up approach, as we explained, we first need to break down all the anticipated expenses into smaller typical categories, as we did it here. Okay, now what? We can divide the costs as being costs in each year, 2017, 18, 19, and 20. So this is a breakdown through the years. And then at each year, we will have tuition and fees, books and supplies, living expenses, and transportation as main categories. And inside each one of these, we have, for example, under tuition and fees, we have tuition, activities fees, memberships, medical insurance, lab fees. And then under books and supplies, we have books, duplication costs, supplies, computer rental, software. Under living expenses, we have again subcategories, and under transportation, we divide it or break down it into further subcategories. Okay, so in the top-down approach, remember, we obtain the data of these tuition costs and etc. from our own university or from a similar university, and we adjusted those values with respect to some criteria like inflation or activity level and etc. But in the bottom-up approach, we don't use these values, but we break down all the associated costs into subcategories, into smaller manageable units. And then we will try to obtain the costs associated with each one of these subcategories. And then we add up all these to obtain the cost for tuition and fees in year 2017. And then we will do this for 2018 and 19 and 20. Similarly, we will obtain these costs. We will obtain each one of these costs and add up them to obtain general books and supplies cost for each one of these years. And for the living expenses and transportation expenses, we will do the same thing. And then we would add up all these costs over all these years to come up with your total university expenses in the 4 years. So we are obtaining the cost for smaller units for subcategories, and we are summing them up to obtain the cost on the 4-year BS degree. This is the bottom-up approach. Now, in this bottom-up approach, we said that we need to divide all the costs into smaller subunits, break down them into smaller subunits, and then we need to estimate their values and then add them up to obtain the overall cost. Then how can we find, or how can we estimate the cost for these smaller subunits? Assume we want to estimate the cost, let's say for books. Okay, now actually here there is a typo in the book. This should be $200 per textbook. Now assume that the average cost of a college textbook is $200. Okay, how can we get this number? Maybe you can have a quick search about the books, and you can find several costs of several books and take their average, and this is the average cost of a college textbook. Now we assume that at each year we are going to take 5 courses. Okay, each year we will take 5 courses, each semester, sorry, and in 1 year we have 2 semesters. And we are assuming that at each course we will use just a single book. Okay, so in 2 semesters I'm trying to calculate the total annual cost, total cost in the first year. How can we estimate? So there are 2 semesters in a year, and at each semester we will take 5 courses, and at each course we will use a single book, and the average cost for a single book is $200, which is this value. Then when we multiply all these, we find that the total cost of books and supplies is around $2,000. So this is an estimated value for the books for each year. But of course, estimating the costs in some categories can be easier, but in some categories can be difficult. For example, when you consider the living expenses and transportation costs, these depend on your lifestyle. If you are traveling too much, if you are living a luxury life, and etc., it depends, the costs will be depending on this lifestyle. Okay. If you live in a high-end apartment off campus, then the cost can be too much, or if you just use a dormitory, then the cost can be less. So depending on your lifestyle, you need to estimate each one of these costs, and when you come up with these smaller costs, you will add up them and you will come up with the total cost. Okay, so we can summarize the 2 approaches, the top-down approach and the bottom-up approach in this figure. In the top-down approach, what we do, we gather historic data. We integrate these historic data. Of course, this historic data can be from previous years or for another, let's say, category similar to our own alternative. In that case, we need to normalize the data or develop correlations between these depending on the similarities, and then using empirical models we will come up with our cost estimate. But in the bottom-up approach, so we break down the cost components into smaller units, and then we apply engineering principles to obtain the costs for each one of these smaller units. We come up with assumptions related to the time and the costs for these individual units, and then we add up all of them to come up with the cost estimate. Okay, so this is the top-down approach and this is the bottom-up approach. Now let's learn how to develop cash flows for feasible alternatives. In this section, we will learn an integrated approach to develop these net cash flows for feasible project alternatives. But first of all, what is a net cash flow? We need to know this. A net cash flow for alternative is the difference between all cash inflows. Inflow means revenue or savings, you are earning money, and cash outflows. Outflows are costs or expenses that you are paying out during each time period. So let's assume that this is year 2021. Okay, you are in an investment which says that you need to pay, okay, in 2021 you need to pay, let's say 10,000 Omani Riyals, and then in 2022 you will pay, during this year you will pay some operating and maintenance costs, let's say, which is 200 Riyals. Okay, but on the other hand, in 2023 you will pay another amount, let's say for 500 Riyals. But it says that each year this business, this is a project, this is an investment, each year you will earn let's say 2000 Riyals. Okay, sorry, these are all in terms of Riyals. So let's assume that this is such a project. Then what would be the net cash flow at each year? Okay, so we can represent it on a timeline. This year is 2021. Okay, usually we denote the current year as 0. And in 2021, let me sketch it or write it here. In 2021 or in year 0, what do? We will pay 10,000 Riyals. So we represent it with a downward arrow and we write its value over here, 10,000 Riyals we will pay. In 2021, do we earn anything? No. Do we pay anything else? No. This is the only thing. Okay, so we represent, this is the net cash flow in year 2021. Let's have a look at 2022. This is year 1 or year 2022. We can represent it here, 2022, or simply year 1. So we are paying 200 Riyals. So it means that we are paying this amount 200. But at the also it says that each year, starting from the first year, we are going to earn 2000 Riyals. So it means that we have an earning of 2000 Riyals. So when you look at this 2022, you are paying 200 and you are earning 2000. So instead of representing it in this way, we simply subtract this cost 200 from the earning, which is 2000, and we write the net amount, which is 1,800 Riyals. Okay, this is what happens in 2022, and this is the net cash flow. It's an earning. So since it's an earning, we are writing it as an upward arrow. If it was a payment, if it was a cost, then it should be a downward arrow. And in 2023, which is year 2, we are paying 500 Riyals, but we are again earning 2,000 Riyals, and again we write the net amount after subtracting 500 from 2,000, so it will be 1,500 Riyals. This is the net cash flow, and this diagram is the cash flow diagram. It shows us what we are paying and earning at each year, but the payments and the earnings are written in terms of net cash flows. Okay, cash flow can be an earning or can be a payment. So we said that we will learn an integrated approach to develop these net cash flows. And this diagram over here shows us this integrated approach. The integrated approach starts with describing the project in terms of a work breakdown structure, WBS. Okay, so we describe our project as a work breakdown structure, and in this we will talk about what is WBS. WBS is used to describe the project and each alternatives that you can use for this project, their unique characteristics in terms of the design, the labor, the material requirements, and so on. All these characteristics, okay, are described in this WBS form. Then these variations in design, resource requirements, and other characteristics are reflected in the estimated future costs and revenues, which means that net cash flow for that alternative. Okay, then to estimate future costs and revenues for an alternative, the perspective, which is the viewpoint of the cash flow, must be defined. Okay, the cash flow perspective must be defined together with the estimating baseline and study analysis period. We define all these. Okay, and cost and revenue structure, their categories must be defined, must be delineated. Okay, and then we describe each one of the feasible alternative using the project's work breakdown structure. We will determine the WBS levels for estimating. We will use different estimating techniques, different mathematical models to estimate these revenues, costs, and etc. For this, we will use our database for historical data for the costs and revenues, and at the end we develop a cash flow for one alternative. So if this is the last alternative, we will stop. Otherwise, if there are some other alternatives, we will return back to this point and describe these projects' work breakdown structure. We will again determine the WBS levels for estimating and use estimating techniques for this alternative, costs and revenues. If we need, we will use the database values, and we will develop the cash flow for this alternative. If there are more alternatives, we will repeat it. Otherwise, we will stop. So this is an integrated approach to develop the net cash flow for all project alternatives. And simply in this integrated approach, there are three basic components. The first one is the work breakdown structure, which is this one. The second one is cost and revenue structure or classification, which is this one. And the third one is the estimating techniques or models, which is this one. And we will talk about these in more detail. One of the basic components of this integrated approach is the work breakdown structure, WBS. Simply, this is a basic tool in project management. They use this in project management, and in also engineering economic studies, we make use of this work breakdown structure. It helps us in our analysis. This WBS serves as a framework for breaking down a project into simple pieces for which the cost information is available. Okay, it defines the smaller work elements. These are the work elements. It defines these elements and their interrelationships. collecting and organizing information, developing relevant costs and revenue data, and integrating these project management activities. Look, for example, this is the complete project. We can divide this complete project into two major categories or tasks. Then we can further divide task 1 into two subcomponents and task 2 also into subcomponents. And as you can see, we can see the relation between these tasks. Task 1.1 and task 1.2 are related in completing task 1. Okay, and this numbering over here, 1, 1, 1, 1, 2, you can use different types of numberings. Usually in such WBS, we have levels. Okay, so this one over here, sometimes called as level 1, or sometimes it's called as level 0. Okay, in your book, this is level 1, and then this is level 2 tasks, this is level 3 tasks, and this is level 4 tasks. And usually, depending on these levels, the tasks are numbered. This is another example, and as you can see in this example, the whole project is divided into 4 levels, and we can see that this first level, which is the project itself, can be divided into 3 major categories. And level 1 is divided as A0, is named as A0, and then the second level is named as A1, A2, and A3, and then in the third level we use again A1A, A1B, similarly here A2A, A2B, A3A, A3B. And then we turn back again A1, A1, A1B2, and etc. As you can see, this is an alphanumeric representation, and the number of characters here, as you can see, A1, A1, so there are 4 characters. The number of characters represents the depth of the level. This is another example for a construction project. So for constructing a small commercial building, this WBS structure shows all the categories and subcategories, and only the first 3 levels are represented here. Of course, it can be more levels in more detail. WBS structure, it can be 5 levels, 6 levels, and etc. So if we look at the numbering over here, now we use this kind of numbering. The level 1, this is 1, 0, represents the whole project. Then in the second level, we have 1, 1, 1, 2, 1, 3, 1, 4, 1, 5, 1, 6, 1, 7, 1, 8, 1, 9, 1, 10. So all these are in level 2. Since the space was not satisfactory, they represented it in this format. And then, as you can see, this 1, 1 is further divided as 1, 1, 1, 1, 1, 2, 1, 1, 3. So the number of characters in this numbering represents the level. So these are level 3 tasks. And as you can see, this commercial building project, we can divide it into major categories as site work and foundation. Exterior is another important category. Interior, construction of the interior, the design and construction. Roof, electrical systems of the building, mechanical systems of the building, the real estate, project management, and all these components are the major categories. And then we can further divide this, for example, site work and foundation, into subcategories as site grading, excavation, sidewalks and paving, and etc. So this is a 3-level WBS structure, work breakdown structure, for constructing a commercial building. So by developing such a WBS structure, we can identify the relationships between these categories. We can use this as a bottom-up approach to estimate the costs. We can use WBS, as I said, to see the relationships between the tasks, the content and resource requirements for a work element. For example, the contents and requirements of this work element are the sum of the activities and resources of related sub-elements, these elements, okay? And also in a project WBS, usually this includes recurring costs such as operating and maintenance costs, and non-recurring costs, for example, the initial construction costs and etc. This is another representation for the same example. This is a representation of the commercial building project in a tabular format. As you can see, this is level 1, this is level 2, and these are level 3 activities. So instead of representing it as a diagram, we can also represent it as a tabular format in this way. The cost and revenue structure is the second basic component of the integrated approach for developing the cash flows. This is a brief listing of some categories of costs and revenues that are typically needed in an engineering economics study. Detailed data are developed and organized within this structure for use with the estimating techniques that we will learn to prepare the cash flow estimates. For example, the life cycle concept and the WBS structure are important aids, helpers in developing the cost and revenue structure for a project. All the associated costs and revenues during the life cycle of a product or service can be considered in the cost and revenue structure. In developing these cash flows, sometimes some errors are made, and maybe the most serious source of errors is the overlooking of some important categories of costs and revenues. So therefore, the cost and revenue structure should be designed carefully. If it is prepared in a tabular form or a checklist form, it can be a good means to prevent such oversights. So these are some listing of some categories of costs and revenues that are typically needed in an engineering economy study. Capital investment. This is the investment that we do at the beginning of the project. The material cost, if we need to use some materials, then the cost of the material, the cost of the labor, maintenance costs, taxes and insurance, the overhead costs, disposal costs at the end of the product lifetime. These are some costs. There may be some other costs, but these are the major cost categories. Also, the last two are the revenues, are the earnings. Okay, these are the costs, which means that an outflow of cash. The last two are represents an inflow of cash. Revenues based on the sales, and the market value, or we will call it the salvage value at the end of the lifetime of a product or an item or an equipment. These are the revenues. We will learn all these, or we will talk about these later on in the following chapters. The last basic component, which is the third one in the integrated approach, involves estimating techniques and models. We will learn several estimating techniques in more detail, which the models that we will talk will be use of indexes, unit technique, factor technique, power sizing, and learning curve techniques. The purpose of estimating is to develop cash flow projections. Of course, we cannot produce the exact data for the future because it's impossible. The future is full of uncertainties. And our objective here is not to find the exact values. It's impossible. But the thing is, we need to find values which can be or which can adequately suit the need at a reasonable cost. Okay? What we mean as a reasonable cost. In order to estimate, in order to make estimations, you need to spend time and effort, and it's costly. So if you use a more detailed approach for cost estimation, it will be more costly. It will consume more time. But of course, it has the potential, or it may be the more accurate. But if you spend less time, it will be less costly. It's a less sophisticated method, let's say, but it will be less accurate at the same time. So there is a trade-off between the cost of estimation, the time of estimation, and the adequacy. And the thing is, we can classify the estimation methods according to their level of detail, accuracy, and their intended uses. For example, we can talk about order of magnitude estimates. Order of magnitude estimates. Usually, these order of magnitude estimates are used in selecting the feasible alternatives for the study. Their level of accuracy is in the around 30-50%, plus or minus 30-50%. So these are less accurate, less costly alternatives, and they can be obtained or developed through conferences, questionnaires, some general equations, and etc. And these are used in the planning and initial evaluation stage of a project. So this is the first one, order of magnitude. The second cost category or estimation category is the semi-detailed or budget estimates. So this is a little bit more accurate estimates. These are compiled to support the preliminary design effort and decision making. The accuracy level is around plus and minus 15%. So this is 30-50% accuracy plus or minus. This is around 15%. And the third one is a more detailed approach. So it is definitive third category of estimation methods with respect to their detail and accuracy. Sometimes it's called detailed estimates. And these are used in the detailed engineering and construction stage of a project, and we expect the accuracy of these methods to be around plus and minus 5%. And in order to obtain these estimates, we use specifications, drawings, site surveys, vendor quotations, historical records, and etc. This is a more detailed estimation technique. Of course, as I told you, the selection of the detail and accuracy or the category of estimates to be used depends on time and effort that is available, the difficulty of estimating the items in the question, the methods or techniques that we employ, qualifications of the estimators, and the sensitivity of the study results to particular factor estimates. These are the the level of detail and accuracy of estimates depend on these factors. Of course, in order to use estimation techniques, we need some data. And what are the sources of this data in a company? The most important source of data is the accounting records. These are the prime source of information for economic analysis. Okay. The second source can be some other sources inside the firm. For example, the engineering, sales department, production department, quality, purchasing, and or departments and etc. We can also obtain some sources outside the firm. For example, we can find some published information. There can be several general reports or web pages that you can find. Or also we can find, use some personal contacts, for example, vendors or sales people or some customers, banks, government agencies to find some necessary data. And also we can obtain data from research and development. So please read your book about these estimating techniques and models, and you will find more details in your models. So this is the end of this lecture. In the following one, we will talk about, or we will see the details of some estimation techniques. We will see their models, we will see their calculation methods. We will learn these in our following lecture.